Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. I'm Phil Carroll, and today I'm joined by Greatland Gold CEO Shaun Day. Welcome back, Shaun. How's things?
Yeah, really well, Phil. Happy New Year to you and Kevin, and thanks for having me on the roast again.
Yeah, thanks very much. It's one of those, isn't it? It's like you look at the calendar and January's nearly been burned. You know, we're at the 25th, 26th, and you just think to yourself, well, is it too late? When is it too late to say Happy New Year? But I guess if we've not spoken, I think January we can get away with that, right?
I think that's my philosophy, the month of January. So I've got 6 more days.
Certainly better than saying get lost or don't like you, isn't it?
Yes.
I would say Happy New Year is a good option. Yeah. Happy Chinese New Year anyway, because Chinese New Year only just happened, I think.
Yeah.
Well, I think more importantly, gentlemen, it's Australia Day tomorrow. I think that's
get the flags out.
That's the one I assume is celebrated throughout the Commonwealth.
Of course, being British, we know exactly when Australian Day is. Tomorrow, day off for everybody?
It is indeed. It is indeed. But they stay on the tools up at Havieron, which is good.
Okay, so today we saw an update from Newcrest Mining. Your 70% Havieron joint venture partner released its quarterly exploration report, which looks very exciting and shows great progress, with the resource continuing to grow and the record high advancement rates achieved. Do you want to elaborate on this, please?
Yeah, look, I think you've hit exactly on the two highlights of the quarterly, and we replicate a lot of that information in our RNS. But I think that there's two stories. Firstly, the decline development. I think our narrative has always been that you're going to see relatively slow progress in the upper echelons of that Permian cover. As we've descended through that and made progress, we're now getting into better competency of rock, and you're just seeing that acceleration. You've seen record month after record month, and we're really pleased with the speed of that development now and prospect to further accelerate. But I think it gives us a lot of confidence around the decline and the narrative of timetable we have in the market. Then switching to the exploration, as you described, more good drilling. The story of 2022 has really been around that Eastern Breccia. The results today are supportive of that. A couple in the Northern Breccia too, which is great. But that Eastern Breccia is so much larger than when it first came into the resource over a year ago in terms of drill cutoff, and plus the grade has got better. Eyeballing it, has it doubled or thereabouts, but it's really positive from our perspective. And of course, that's potentially the next phase of mining at Havieron. So it's important and very welcome.
Very good, Shaun. Yeah, I mean, it all looks like great progress. I mean, some sort of record for creating the decline. What, just to put it into perspective, 1,519 meters completed. How much further have we got to go?
So let's start by breaking down that 1,500 meters. So that includes some overtaking bay development and stockpiles. So it's probably around 1,300 meters of change, i.e. meters of the decline towards its objective, being the top of the ore body. That's around 2,800 meters that we're trying to achieve. So we're 1,300 into it. But when you start applying that current run rate, you start and you extrapolate that out, I think that's when you get a lot of confidence that we are ahead of forecast in terms of reaching the ore body in March 2024. So I think that's very positive.
So we could be looking at, if this rate continues without any problems effectively along the way, then you could be celebrating Christmas with the incline, close to being finished.
Yeah, well, look, without trying to put a date on it, I think what I'd like to do is emphasise that we've talked about March 2024, and we're not changing that date. But yes, there's I think it's very encouraging along the lines that you described. I think there's actually opportunities to further accelerate as well. Having said that, no development is linear. There's always challenges. There'll be changing ground conditions. Again, we've said that Permian layer has a very strong trend towards more competent rock width depth, but it is not homogeneous in that sense. So there can be areas that will be challenging. Now, we do I think quite a good job these days of doing geotech drilling to understand it better, but it is something that's an ongoing focus for us. But certainly being ahead of schedule gives us greater flexibility to achieve whatever we need to achieve.
What degree of incline are you actually going down at? Like, so you can walk down it, or it's quite steep, or what is the situation?
No, you can. It's about a 1 in 7 decline, so you can certainly walk down it, or indeed up it. And that's what you drive down, and the trucks run up with 40, 60, 80 tons of ore, depending on what the final truck sizing is. But and that's why the decline is not steeper. If I contrast, if you did a conveyor decline, which is one of the things we've talked about as perhaps assisting a future expansion of the mine, you do that steeper. You might take that to a 1 in 6 decline, because you're just going to be driving LV, so light vehicles, up that without big ore payloads. So you can have it a little bit steeper, but again, you'd be able to comfortably walk up a 1 in 6, let alone a 1 in 7 decline. Having said that, when it's 2.8 kilometer hill, you'd notice that after a while when you're in boots and your high vis gear and everything else, but it's very navigable.
And I was looking at some of the results, okay, and you did state here that noting that the intercepts reported below are downhole width and not the true width. So can you give us some sort of background and explanation on that? I presume this means that effectively, because we're going at an angle, we're missing some of it.
Yeah. So look, that's been a feature of every announcement Greatland's has done. That's always been the basis of reporting. So what we're doing is giving you whole intercepts rather than trying to reinterpret that as to what we think is the width of that part of the ore body. But I think all of that is ultimately assessed into that resource. So I think how I'd say that is you're seeing apples for apples in terms of our reporting. We haven't switched. It's absolutely consistent over the, what would it be, 4 years of reporting at Havieron. So yeah, no change there. But all of that gets calibrated in trying to understand, as you plot them, what the actual width of a ore body is when you come to mine it.
Yeah, and I noticed that the Northern Breccia, you got 22 meters at 8.1 grams. That's pretty impressive for gold.
Yes, and I think what we're really enjoying about the drilling we're doing in the Northern Breccia is getting some high grade areas. I think when I talk about the Eastern Breccia, I'm kind of talking about the whole envelope looking like it's consistently higher grade than when we first entered that area. I think with the Northern Breccia, I'd be a little bit more cautious about that. And I'd say what there is high grade pods. Now that's helpful, because high grade, if you take out a large volume, the high grade contributes a lot of ounces, and that's really positive. But it also gives you flexibility of mining methodology. You can have like a Sunrise Dam. So without being too technical here, but that's another really good Australian mine owned by Goldfields. But what they have done is they selectively drift out or drive out to high grade pockets in Sunrise Dam and take that. They don't take the whole bulk zonation. So those kind of high grade pods give you the flexibility to either take a more selective mining methodology or to just build them into your model as part of a bulk. So I think that's positive, and adding grade to the Northern Breccia is tremendous.
So what you're talking about there is that in some parts of Havieron, you may well be effectively just going in and taking the seams out, and in other parts you're going to go in and basically just mine the whole lot and bring it up.
I think what I'm actually saying is it gives us flexibility in the future. Right now, our mine plan is around the southeast crescent, and you want to take all of that. And SLOS is the sub-level open stoping methodology is really good because it has defined boundaries. You can really do that, minimize dilution. Then it's a sub-level open stoping with paste fill, and then we come in with the secondary stopes and take the whole lot by filling that void with a paste. The Eastern Brescia and Northern Brescia are potentially bulk mine zonations, but having the flexibility of, say, again, stoping out the southeast crescent, again, you might want to take the whole lot of that because of the grade you're getting there. And then in the Northern Brescia, do you do the bulk, or do you say that we make more money by being selective, as you described? But we're nowhere near making that decision, particularly on the Northern Brescia. I think that would be our third mining zonation. But it's lovely to have choices. It's lovely to have optionality. And I think that's where I see it as positive. But the fundamental of that is we're adding ounces, and high-grade ounces are the best ounces to add. So it's good. This is good.
You said that you're going to be ramping up with 3 rigs on site from February for the drilling activities. This is from the surface. Then I take it you're not going down into the incline and drilling from there at this point.
Correct. Let me answer that in 2 parts. Okay. So let's move to the question on drill rigs. Just like last year, we actually demobilized the rigs just before Christmas, and the reason for that is multifactorial. One is the heat in the wet season, which is the most difficult time to drill, but also it's Christmas, giving people a break after a long year to spend time with their families. But thirdly, the drill rigs do need maintenance, so it's the right time of the year to do it, or the most efficient. So what we're saying is we're bringing back 3 rigs in February. They are all surface rigs. We don't intend to do any drill drives off the decline until we're right on top of the ore body. And that's just the most efficient time to do it, because what we want to do is do cheap, efficient drilling and try to get the drill drive structured in a way where we get a really good azimuth or angle down into the ore body that we want to hit. So those 3 rigs are surface rigs, which is everything we've done to date. And perhaps just to give you a bit more insight there, across 2022, last calendar year, we did a lot of drilling into the Eastern Brescia and to the Northern Brescia and try to have a better understanding of the system and those future mining areas. With mining starting to come up on our horizon in 2024, what you'll see this year is a bit more focus again on that southeast crescent as we build up our inventory and our understanding of those areas that we're going to mine. So I think you'll see a more focus on that southeast crescent again.
So I guess after 4 years of drilling, as you just alluded to, it's still open at depth and moving east and southeast. I mean, would it be safe to say that Newcrest has adopted a staged approach to the evaluation and development of Havieron, aiming to deliver early production and cash flows from the project while work continues to define potential resource additions and assess growth targets?
Phil, I'm not sure I can add to that. That was a good, the question was a good answer. I think that's absolutely right. So I think Newcrest has adopted a staged approach to this. I think the question was predicated around there's positive drill results. There's a focus on that southeast crescent. Yeah. We're driving in that early to generate free cash flow. And then that free cash flow can self-fund the development of the future ore body, so the future mining zonations, be it I think more likely the Eastern Brescia and then in turn the Northern Brescia. And being self-funded is tremendous. So getting to free cash flow is very positive. And of course, it's almost unique, but certainly probably limited to majors, this ability to fast-track Havieron. And it's fast-tracked because normally the sequence of events is that you drill it, you do the PFS, you come and get the feasibility study. Sometime after that, you'd announce your funding, and then you'd start the decline. In this case, early decision, world-class ore body, let's cut through, get that decline in, get down to the ore body. So really the gap between feasibility study and first ore is going to be indecently short by mining kind of company standards.
Yeah.
And what that means is quickly into free cash flow based on the part of the ore body we best know, which is that southeast crescent. And then you're down there as well. So those drill drives, which comes back to Kevin's question on drilling platforms, you're already in the underground. So rather than kind of drilling all the way from surface, suddenly you've got drill platforms halfway down the mine that can then spread out, fan out, and not just make it cheaper, but also shorten the cycle times to understand the future growth of that ore body. So we really should celebrate the fact that a major wanted to come in, and the fact that a major had such conviction to hit the accelerator on Havieron.
Yeah, because normally with JVs, a lot of these junior explorers and mining companies, they don't like getting involved in joint ventures because they're at the mercy of the major and their timescales. And if they're busy with other projects elsewhere, then it obviously can delay. But it seems, I guess, you're happy with the progress to date at Havieron.
Well, particularly after this quarterly update, the progress is tremendous. Oh, look, and look, there's still, I want to be really positive about Newcrest. We appreciate the relationship. We appreciate what they've brought to the table in terms of acceleration. Having said that, we would have loved the feasibility study to be announced last quarter. For Newcrest, I think because they have, 5 operating mines, their view on materiality, they'd rather spend the extra time bringing some optimization works and programs that they're looking at around ventilation, around the application of EVs. Look, we actually technically really agree with that and bring in the additional resource, because remember, one of my concerns with the feasibility study was it was going to have a cutoff of 13 months prior to announcement. Almost getting in a TARDIS and going back in time to understand what the ore body was like in 2021. But so I think a lot of those decisions are technically correct and best for the ultimate development in Havieron. I think if we were doing it as standalone, the truth is we would have felt a huge desire to get out that feasibility study last year, and I still want it. It's something we talked to Newcrest a lot about. We'd like to have the clarity around the time frame as well, but I do appreciate the fact that a major can be technically led and say, well, we really just want to understand these technical things, and once we've completed that analysis, then we can give a very clear timetable on how long it will take to put the report together.
What do you think are the next, it's a difficult question, but what do you think are the next value accretion events for the company moving forward? You've obviously already alluded to the feasibility study, etc., but obviously there's been a large number of investors who've come on board for the funding round. Obviously we've had Forest with Wyloo Metals on board. When do you think they're going to see some real value back in their investment?
Yeah, look, I think we've also done that in the backdrop recently of a rising gold and copper price environment. So to be open with you, I think you're seeing the ASX market gold peers walk up better than we have over the last 3-4 months. But I think there's a greater level of buoyancy in Australia than in the UK right now, or Europe, and perhaps we just feel a little bit further away from Russian aggression or things like that, or although we're closer to the Chinese, so I'm probably prefer to be in Europe. But it is, for whatever reason, I think that the capital markets up in London are a little less buoyant now. That gives us an opportunity in the future, but in terms of the catalysts, I think we've got ongoing drilling. You're going to see, I think you'll probably see further record exploration, development rates being achieved. I think you're going to see the progress with things like the EPA. We're going to bring on some selected more people just to complete our technical and show our focus on business development. We've talked about that being a bit of a centre of gravity for us. You're going to see ongoing drilling. You're going to see focus around our exploration campaign, and I'm really looking forward to, in due course, being able to talk about getting on Ernst Giles, which I I've always talked is an absolute ripper in the portfolio. So I think we're pretty catalyst rich. And to be open with you, I think bringing on that ASX listing, which we hope to do in the first half of this year, even if it's a compliance listing, I've spoken, even this week, I've spoken to a couple of Australian funds, and some of them are mandate locked onto the ASX. They're interested in us. They're across it. They know Newcrest well, so they're familiar with Havieron. Bringing that whole new group of potential investors who are focused on Australian mining and often gold assets just seems a really neat step to take, and I think they see value in our stock right now.
I'll translate that for anybody who didn't quite get it, is that we're actually undervalued at Greatland Gold because everything else has gone up and this hasn't, including all American gold stocks as well. So the reality is the rest of the world, other than London, has actually realised that the gold stocks are worth more, but London hasn't. Sorry for that, Shaun.
No, it's nice to have the cut through of messaging there, but yeah, look, these things are multifactorial, and markets are markets, but yeah, I think that the European and London market is a little bit more measured still, but sentiment is important in how people feel about stocks and decisions. What I might add, just since we've kind of moved down this thing, we saw some of the directors exercise some options. What we were able to do there, which I was really pleased about, is do a placement of those options into a new UK-based institutional investor. I've talked before about broadening our investor base, keeping all the benefits we have of this retail following, but augmenting that demand with institutions. And slowly but surely, we're seeing that happen. Our last equity raise was institutional. First time we've actually had a line of stock. A new institution came in and bought that. Otherwise, there would have been X number of shares being sold onto the market. Instead, now when that happens, you see an institution come in and stabilize it. I think that's really positive and tangible benefit of the marketing engagement of institutions.
Yeah, and as you move back to a £1 billion company again, which is basically what you flirted with for a period of time, then the institutions are going to have to come in because there's not enough retail money to actually cover that, even if you wanted it, almost certainly. So,
and this is part of the benefits, without getting too technical about the market structures, but on the ASX we'd potentially be indexed, which also means you have passive funds buying as well, because they simply have to occupy your percentage of the index. So there are some really good benefits of being on an indexed exchange.
Yeah, and you mentioned PFS then next year, I think at some stage it's finished, the PFS, or do you expect that will be completed this year?
Look, I think it's difficult for me to give timetables without reference to my joint venture partner. I think previously the joint venture, being both Newcrest and Greatland, were both consistent in saying that they were targeting a feasibility study out in the December quarter of 2022. The manager of the joint venture, which is Newcrest, decided that they wanted more time. Until they give us a time frame for that, I think I want to be something we talk about a lot. We believe so much of the work has been done that there can be a reasonably short process. Having said that, I'd love the updated resource to come in. I'd love some of these optimization studies to come in. But ultimately, if we're on track for ore in early 2024, there is a relatively narrow window for this to come out.
First ore is going to mean first cash flow then, I presume, shortly after?
Well, look, first ore is getting ore on the ROM pad, the run of mine pad. Once you need to put that through a mill to generate cash, and have your doré kind of gold bars turned out. But obviously the mill's already there with Telfer, so we'd like to have a short time frame between the two. Ordinarily you'd probably put some ore on that ROM pad, so you're not putting through your first teaspoon of ore. You've kind of got a batch worthy of putting through, particularly a pretty big plant. So I think there's always going to be some natural optimization of cash flows around that first ore and when you batch it. But yeah, first ore is normally the big milestone that the market looks for.
I'm just trying to visualize Shaun Day with a big bar of gold in the middle of 2024, and I think that's probably what's going to happen.
I think that might be a photo on the social media. I'm looking forward to the first bar, and indeed one of the questions we get asked is, can we get it'd be the Perth Mint to turn out some Havieron coins, which I think is a cracking idea. So we haven't quite solved that, but it can be solved. So there's a couple of things we'd like to do to commemorate that in due course.
What I'm trying to say myself is that investors get very impatient, and I see now Havieron is almost becoming touching distance. It's there. From the days of Greatland basically drilling some holes and going, there's gold down here, to now, it's going to be coming out of the ground, and those gold bars are going to be coming. Now, when that all becomes cash flow positive and everything else, this is another story. But actually, gold coming out the ground, it's not that far away.
Oh no, look, I don't want to quite say we're kind of inside of 12 months, but we're not miles off that. So we're really getting into that countdown phase, which is extraordinarily exciting. So hopefully that enthusiasm starts to come through, and I think as we tick off the quarters now, perhaps this is always associating mining companies with a bit of a lull, when you're just going through the hard work of development. But then once you start actually producing gold, I think that, and you become a producer, you do switch categories. We've successfully made that step from explorer to developer. So the step from developer to producer is a really important one. And as you say, it's not far away.
Yeah, and at that stage, you'll need two heads and two hats, because you'll be an explorer again, and you will also be a miner. Yeah,
we don't want to walk away from that exploration, and certainly like Northern Star, we I think added around $9 billion of value during my time there. We always believed in the drill bit. That was a fundamental element of our success, and that's certainly a conviction I bring to Greatland. If anything, I'm keen to accelerate drilling. We respect the processes. We respect our partners and our Indigenous partners. But I'll be rapt to get some rigs spinning out there at Charles. Plus, I think this year you'll probably see us spend a little bit more time on Promus and Panorama. Again, we like those stories. We want to understand them better and be able to make decisions around capital allocation out there. So I continue to like what we have in a portfolio. We continue to look for more ground, and the Tasmanian divestment was not that long ago. We're not afraid to give up ground, but when it's good ground, and that Tasmanian ground is good, finding a better owner, a Tasmanian focused explorer. And for those without a huge working knowledge of Australian geography, Tasmania is quite far from Western Australia, and indeed is across Tasman Strait, which is a multiple of the channel, I expect. So it's good to be able to outsource that to someone who's more focused. We retain upside, we retain equity in that company. We think they'll be successful. We think they're the right team to be successful. But equally, as we drop things, it also allows us to add something new onto the front of the conveyor belt. So, we also spend time, energy, and effort looking for new opportunities to augment what is already a very good portfolio.
It's great to hear you talk so passionately about it, Shaun. And as I say, it's always a pleasure. Shaun Day, CEO of Greatland Gold, thanks very much for your time.
Phil, Kevin, appreciate it, as always, and the support of the Roast team. So thank you, gentlemen.
Thanks, Shaun.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.